Good morning, Sarah. I've put together some preliminary thoughts on expanding our investment portfolio into the retail industry in Vietnam. The market dynamics there have caught my attention, and I think it could be a strategic move for us.
Morning, Justin. That sounds interesting. What specifically drew your attention to Vietnam's retail sector?
Several factors, really. First, Vietnam's economy has been consistently growing at a solid pace. We're looking at a GDP growth rate of around 6 to 7% annually. This growth is fueling a rise in the middle class, which in turn is driving consumer spending. The retail sector is one of the major beneficiaries of this trend.
I see. The growth sounds promising, but we need to be mindful of the risks as well. What's the current state of the retail market in Vietnam? Is it highly competitive?
It is competitive, yes, but there's still plenty of room for growth, particularly in modern retail formats. Traditional markets still dominate, but supermarkets, convenience stores, and e-commerce platforms are rapidly gaining ground. The government is also pushing for modernization in the sector, which could create opportunities for us to invest in companies that are poised to capitalize on this shift.
That's encouraging. How about the regulatory environment? Are there any significant barriers to entry or issues we need to be aware of?
Vietnam has been progressively opening up its market to foreign investors, especially after joining various free trade agreements. However, the retail sector still has some restrictions, particularly in terms of foreign ownership. We'd need to either partner with a local firm or structure our investment in a way that complies with these regulations. On the plus side, the government is actively encouraging foreign investment in sectors that promote modernization. So we might find some incentives or support if we position ourselves correctly.
Partnering with a local firm could be a viable strategy, but it also means due diligence will be critical. We need to ensure that any potential partner aligns with our values and business objectives. Have you identified any companies that could be a good fit?
I've started to look into that. There are a few local retailers that have shown impressive growth and are looking to expand their operations. For example, some of the larger supermarket chains like Saigon Co-op or Vinmart could be potential partners. They have a strong brand presence and a deep understanding of the local market. We could either take a minority stake or look into forming a joint venture.
Those are big names. If we were to approach them, what would our angle be? What value could we bring to the table that they might be missing?
Justin, we could offer capital to fuel their expansion, particularly into underserved areas or in enhancing their e-commerce capabilities. Additionally, we have expertise in supply chain management and digital transformation, areas where we could provide significant value. Vietnam's retail sector is still catching up in terms of technology integration, so our experience could help them leapfrog some of the challenges.
That makes sense. What about e-commerce? You mentioned that it's growing rapidly. Should we be looking at pure-play e-commerce companies as well?
Absolutely. The e-commerce sector in Vietnam is booming, with companies like Tiki, Shopee, and Lazada seeing exponential growth, especially after the pandemic accelerated online shopping habits. We could consider investing in or even acquiring a stake in one of these platforms, or perhaps in a logistics company that supports e-commerce, given the importance of efficient delivery networks.
Sarah, the e-commerce space seems promising, but it also tends to be highly competitive and capital intensive. How do we assess the risk of entering such a market?
You're right. The competition is fierce, particularly with global giants like Amazon and Alibaba keeping an eye on the region. However, local players have the advantage of understanding the market nuances and consumer preferences. We'd need to carefully evaluate the market share, customer loyalty, and the technological infrastructure of any company we're considering. Moreover, we could mitigate some risk by focusing on companies that are targeting niche segments or underserved areas, rather than trying to compete head-on with the giants.
That's a good approach. How do you see the potential returns from this market? What are our projections?
If we go with a balanced approach, investing in both brick-and-mortar retail and e-commerce, I estimate we could be looking at returns in the range of 10 to 15% annually over the next 5 years. This is based on current market growth rates and the expected expansion of the middle class. The key will be timing and execution. Entering the market now, while it's still on an upward trajectory, could position us well to capture a significant share.
Those returns are attractive, but we need to weigh them against the risks. Aside from regulatory challenges, what other risks do you see?
The main risks would be currency fluctuations, which could impact our returns if the Vietnamese dong depreciates significantly. There's also the potential for political instability, although Vietnam has been relatively stable compared to some of its neighbors. Finally, the competitive landscape could shift quickly, especially with the possibility of new entrants or changes in consumer behavior.
All valid points. Currency risk is something we'd need to hedge against, possibly through forward contracts or other financial instruments. Political risk is harder to mitigate, but it's worth considering in our overall risk assessment. What's your view on the competitive landscape evolving?
The retail industry globally is in a state of flux, with digital transformation being a major disruptor. We could see new competitors emerge from unexpected areas, such as tech companies moving into retail. However, if we focus on companies that are agile and adaptable, we can position ourselves to benefit from these changes rather than be blindsided by them. Partnering with local players who have a strong market presence could also provide some insulation from external shocks.
Agreed. We need to be forward-thinking and ensure that any investment we make is with a company that's capable of evolving with the market. What's your next step from here?
I'd suggest conducting a more detailed market analysis, focusing on consumer behavior trends and the financial health of potential partners. We should also start preliminary discussions with local firms to gauge interest and alignment. If you're on board with the overall direction, I can start laying the groundwork for these next steps.
Yes, let's move forward with that. I'd also like to see a risk assessment matrix in your next report, outlining the specific risks we've discussed and how we plan to address them. This will help us make a more informed decision when we bring the proposal to the board.
Absolutely. I'll include that in the next report. I'll aim to have the initial findings and the risk matrix ready for review within the next 2 weeks.
That sounds good, Justin. This could be a significant move for us, so let's make sure we approach it strategically. I'm looking forward to seeing your detailed analysis.
I'm on it, Sarah. Thanks for your guidance. I'll keep you updated as we progress.
Perfect. Let's touch base next week to review the initial findings and see how we're progressing. Have a great day, Justin.
You too, Sarah. I'll talk to you soon.